Hi there folks, I'm Tim Russell from LJ Hooker with this month's Market Wrap, and of course the big news, I'm here outside the Reserve Bank of Australia today, and of course because the big news is that they have dropped the interest rates this month to a new record low of 1.25% on the cash rate. Now that has been about 3 years in the making. It is incredible news of course for many people, not good news for others, but it has had an impact on the economy and the property market in general. Who are the winners and losers in all of this, and what does it actually mean to you by having a lower interest rate? Well, the winners are of course mortgage holders, and those people with an average mortgage of about $450,000 will save, depending on their bank, something to the tune of $100 a month, $60 to $100 a month, so it could be $1,000 a year. And the whole idea behind that is that it produces some more money to put into the economy. If you want that extra money or to save that money and not be paying it off your mortgage, you need to speak to your bank to make sure that they allow you to lower those repayments, even if your interest rate has been lowered. First home buyers, they're probably not going to win so much, although beginning the 1st of July, the new first homeowner subsidy criteria comes in, where there will be no stamp duty payable on property for those with a combined household income of less than $160,000 for first home buyers alone across the market. Those people, it doesn't mean they're going to be able to borrow more money. The APRA, the Australian Prudential Regulatory Authority, still has the role of making sure that you can service those loans, and there are some limitations around that, although they have also given the banks a little bit more sway to be able to make sure that they can assist first home buyers there. But with all of this interest rate cuts, will it increase the economy? Will it stimulate growth? Well, there's some doubters out there. The Governor of the Reserve Bank said that they would, and they expect that over the course of 2019-2020 that we will see inflation increase to 2.75%. There are some naysayers out there in relation to that, and there is certainly some very good cause that if that doesn't take place, that the Reserve Bank can and probably will reduce the interest rates once again. And some economists saying that could go as low as 0.75% before the end of the year. Now that would be unheard of course, but it would certainly stimulate the economy without question. If you are a retiree, it's probably not going to affect you too much in the short term, because you'll have superannuation to draw from and probably property where you'll be earning income. If anything, property owners may well see property prices increase somewhat, but the whole idea behind the Reserve Bank's decision from a property standpoint is to try and stem the bleeding in relation to property prices across Australia falling. And there is no question that there has been an adjustment in the market. You'd have to be living under a rock to not see that that's been the case. And we will certainly see how that reflects in the coalface. We certainly have seen some increased activity around properties at the moment. That might be a little bit of a function of the change in the first homeowners stimulus coming in the 1st of July, as much as the change in interest rates. But if there is an increase in the money going into the pockets of people, and let's face it, there's plenty of people out there struggling to pay their mortgage with the increased cost of living, just with things like food, petrol, electricity, gas, all of those commodities and day-to-day expenses. And if you've got children, you'll know what I'm talking about. Life is expensive, so it is welcome relief to homeowners that there is an opportunity to save some money there, and the potential of further rate cuts to come. Of course, out there in the marketplace, if you are looking to buy, it is still a very good time to do so, and looking to sell, well, this may just be the time to get on the market and get on the front foot as far as activity is concerned in the marketplace. We still haven't seen an oversupply of property out there in the marketplace, and prices are still reasonably subdued. Auction clearance rates have increased a little bit since the interest rate cut was brought in, and we've seen that crack over 50% here in the ACT, which is a really nice sign for property sellers, although we're not out of the woods yet. And it's welcome relief to people in the real estate industry as well, of course, to see a bit more activity on the weekend. Folks, I think that just about wraps us up for this month. If you'd like to find out a little bit more about what's going on out there in the marketplace, please do give me a call. I'm happy to help and have the discussion, and I'd love to hear your thoughts as well. But until next month, I'm Tim Russell from LJ Hooker, and I will see you around the traps.